If you're a homeowner looking to tap into your home's equity, Truist Bank offers a home equity line of credit that could be a viable option. Formed in 2019 after the merger of BB&T and Truist Bank, Truist primarily serves homeowners in the Southeast and Mid-Atlantic regions of the United States. This review will provide a comprehensive overview of Truist HELOC, examining its features, benefits, and potential drawbacks to help you decide if it is the right choice for your financial needs. A Truist HELOC allows you to borrow against the equity in your home, offering the flexibility to lock in a fixed interest rate on portions of your credit line. This can be particularly advantageous in a rising interest rate environment. Additionally, Truist may cover the closing costs for HELOCs up to $500,000, though if you settle your HELOC within 36 months, you might need to repay those costs. There is also a $50 annual fee in certain states and a one-time $15 fee for setting up a fixed-rate portion. However, Truist HELOCs are only available in specific states, including Alabama, Arkansas, California, Florida, Georgia, Indiana, Kentucky, Maryland, Mississippi, New Jersey, North Carolina, Ohio, Pennsylvania, South Carolina, Tennessee, Texas, Virginia, Washington, D.C., and West Virginia. If you do not reside in one of these states, Truist HELOC will not be an option for you. Truist HELOCs offer several appealing features. One of the key benefits is the ability to convert part of your HELOC balance into a fixed-rate loan. This can help manage your repayments more predictably, especially if interest rates are on the rise. The bank also offers the possibility of covering closing costs on loans up to $500,000, which can save you a significant upfront expense. The loan limits for Truist HELOCs can go up to $500,000, with a loan-to-value ratio of 89%. This means you can borrow up to 89% of your home's current value, minus any outstanding mortgage balance. For instance, if your home is valued at $500,000 and you owe $200,000 on your mortgage, you have $300,000 in equity, and you could potentially borrow up to $267,000 through a Truist HELOC. Truist does not explicitly disclose its minimum credit score requirements, but it is implied that a score of 720 or higher will yield the most favorable terms. The repayment terms for a Truist HELOC include a 10-year draw period, during which you can borrow and repay funds, followed by a repayment period of up to 20 years for variable rate loans. For fixed rate loans, repayment terms can be 5, 10, 15, 20, or 30 years. Despite its advantages, there are some drawbacks to consider with the Truist HELOC. One of the primary concerns is the geographic limitation. If you do not live in one of the states where Truist offers its HELOCs, you will need to look elsewhere. Additionally, while Truist may cover the closing costs initially, if you pay off your HELOC within 3 years, you might have to reimburse these costs, which can be substantial. Another downside is the $50 annual fee that applies in certain states, along with a $15 fee each time you set up a fixed-rate portion. Moreover, Truist does not provide pre-qualification options without a hard credit check, which could impact your credit score if you decide not to proceed with the loan after seeing the rates and terms. Customer reviews of Truist HELOCs are mixed, reflecting the challenges and benefits experienced by different users. Many customers have appreciated the ability to secure low rates and the convenience of having accounts with no overdraft fees. However, some have faced difficulties, particularly related to the merger of SunTrust and BB&T, which led to transition-related issues and customer service challenges. One user reported positive experiences with timely payments and helpful branch staff, while another highlighted problems with payment posting and account management after the merger. These mixed reviews indicate that while Truist offers competitive terms and benefits, the customer service experience can vary significantly. Applying for a Truist HELOC involves a comprehensive online application. You will need to provide proof of income, recent tax returns, information on your current debts, and your contact information, including your Social Security number. Sometimes, Truist may require a property appraisal to determine your home's current value, which can extend the application process to several weeks. Being prompt in responding to requests and having all your documents ready can help expedite the process. Once your application is submitted and all necessary documents are provided, it typically takes about 30 to 35 days to close and receive your funds. Regularly checking your emails, including your spam folder, for updates can help ensure a smooth process. To be eligible for a Truist HELOC, your credit score and financial history play crucial roles. While Truist does not specify a minimum credit score, a score of 720 or higher is recommended for the most favorable terms. Additionally, having a history of timely payments, a low debt-to-income ratio, and no recent bankruptcies or foreclosures will enhance your chances of approval. Another important factor is the amount of equity you have in your home. Truist requires an LTV ratio of 89% or less. This means your mortgage balance should not exceed 89% of your home's current value. If your LTV ratio is too high, you may need to pay down existing mortgages or avoid further debts against your property to qualify. Truist HELOCs come with several fees and potential penalties. Besides the closing costs, which Truist may cover, there is a $50 annual fee in certain states and a $15 fee for setting up a fixed-rate option. Additionally, if you repay your HELOC within 3 years, you might need to repay any closing costs covered by Truist. The interest rates for Truist HELOCs vary based on your credit score, loan-to-value ratio, line amount, and the property's location. Truist offers 3 repayment options: variable rate, interest only, and fixed rate. The variable rate repayment option involves a minimum payment based on the current outstanding balance, set at 1.5% of the total balance. The interest-only repayment option covers only the finance charges from the previous month, and the fixed-rate option has specified terms ranging from 5 to 30 years with a $15 service fee for each fixed-rate advance. Truist HELOC can be an attractive option for homeowners in the Southeast and Mid-Atlantic regions seeking a flexible and potentially cost-effective way to tap into their home equity. The ability to lock in a fixed interest rate on portions of the credit line and the possibility of having closing costs covered are significant advantages. However, the geographic limitations, fees, and potential need to repay closing costs if the HELOC is settled early are important considerations. Before deciding on a Truist HELOC, it is crucial to weigh these factors against your specific needs and circumstances. Comparing Truist offerings with other lenders can also help ensure you find the best HELOC for your situation. Alright, so I believe that's pretty much it for this review. If you found it helpful, consider subscribing and giving this a big thumbs up, and I'll catch you in the next one. Thanks.